Okay, today is Sunday. It is 4:17 p.m. It is March 1st. After trading for 5 years and losing every penny that I have, except for a couple pennies that's there, um, I finally came to the conclusion. I finally came to the conclusion that uh, there are three main objectives. The three-pronged objective. I think that's why Aquaman has a trident that has three prongs. Okay, three prongs. Aquaman has three prongs, not one, okay, not two, but three. Three of them to cover all the bases. So the reason why there's three prongs is the first of all, it is the mind. Okay, it's the mind. The mind has to be now. This is an evolving kind of a thing that's occurring in my mind because when I first thought about this years ago, and I probably made a YouTube video of it, the 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 understanding is severely deficient. Okay, the understanding of what's making the market is significantly deficient. Whereas now that I've been exposed to it, but still not profitable. Okay, but I'm seeing a importance of understanding these three principles of trading, which is I realized that there is a significant importance in the mental stability in trading. Mental stability is very important because the logical side has to be in control, or the logical side has to be programmed into the subconscious side in order to reduce the risk of uh, the mind being susceptible to trading environment that causes the mind to be weak. When the mind becomes weak, there is the door opens up for all sorts of things to come into the mind that allows inefficiencies in trading, such as FOMO, getting tilted, and things like that. And then also, the mind will get into a situation where it is incapable of processing the current environment, and so it gets out of sync. So the mind has to be strong. If the mind is not strong, it will be a very difficult trading environment, which I've seen for the past 5 years. Okay, so what I have to do. So there's the first part of it. The first part of it is the mental resilience, the resiliency. Okay, the mental resiliency is so important because I could be trading well for 1 month, and if I have my money sitting in that account at the end of that 1 month, and my mind goes wacko, what we'll do is I will risk everything. Okay, because the mind is all of a sudden has tilted, and it happens. I've experienced this. The mind the mind will essentially will go the mind will essentially just tilt, and it'll be just be like out of sight, out of mind. It'll be I've experienced this so many times. Okay, I could be trading well for 2 weeks, and all of a sudden my head is in my hands, and I'm going, why did I do that? Because out of certain situations, it causes me to do things in a certain way. So I have to have a couple things: the mental resilience to bounce right back, to catch myself before something like that occurs, and keep my mind contained in a room so that I could keep it there, so that I can allow my logical brain to run freely, so that I can make the right trades. That's one part. Okay, that's only the first part. The second part is I have to understand to a level of detail of the setups. Okay, such that aware. I become so aware of the setups, so that I am able to so that I'm able to exercise those setups to the T. Okay, that's what I have to be. I have to get to that point. Okay, so I can just imagine. So what that means is, okay. So I was gonna go into an analogy, but now I'll just go into trading. Okay, so let's say I'm using the soft support. Okay, I'm using the soft support. The soft support has several confluences that I need to make sure it's there. Okay, because what I would do is when the price drops to a certain level, I'm thinking, okay, this is a reversal, but it can either go sideways, it could be a reversal, or it could just continue. Because what will happen is there's another thing called there's a thing called a pullback. A pullback occurs, and when that pullback occurs and my mind is switched into thinking that is a reversal, I will lose. And if I don't have a stop loss, I will lose even more. Okay, I've seen that so many times, and I've experienced it. It was painful. That's the reason why I'm penniless right now. I have no money. Okay, that is why. Okay, so that means that I have to make sure when the price moves to a certain level, even if it hits support, I have to see something extra. I have to be aware, because it looks like a breakout. When a pullback occurs, it looks like a breakout. So what it does, it pulls back. It looks like a reversal, but then as soon as I enter, that turns out to be the top ticking it. I've top ticked it now, and then the price drops. So what I've seen, which I failed to make that connection, is that when the price drops, it pulls back. In a lot of the cases, in many of the instances, unless the price drops vertically, and then it bounces right back up, and then that turns out to be the actual reversal. But what happens is when it moves, when the angular attack of that support area, supposed reversal area, what it will do is it'll do a pullback, and the pullback will cause the price to move to a certain amount, and it holds. Okay, then I see it, and I'm thinking, well, it's going to continue going back up. But what ultimately happens is that it will essentially drop. Okay, it happens a lot of times. Even if it goes back up, there's a thing called the double top. I'm a double bottom, a triple bottom. What happens is it drops, bounces up, goes up a little bit, bounces back down, and then I have to see what's going on. And then what it will do is it'll drop, goes up, drop, little high, lower high, drops, but it's essentially creating a wedge, and that type of wedge is bearish. Okay, so what happens is it goes down, pops back up, drops, goes a little bit up, drops a little bit up, and then hugs right there. It has a propensity, it has a statistical probability that it's going to keep dropping, because it's creating a wedge, or possibly something could happen to cause it to move up. That's a break of structure. Okay, those are the things that I have to be intimately familiar with. I have to do a play-by-play, so that when it comes to trading, okay, that I'm familiar with intricacies, the intricacies of the variations, of those trades, that allows me to make the appropriate decision at that time, and not to trade if the trade isn't right. Okay, if it's not behaving the way that I'm thinking, that means that I have to be aware of how it behaves. Once I see certain behaviors, then I can enter into trade, right? Okay, so that's the second part. So the mind, the setup, okay? The mind and the setup, right? Then there's the stop loss, okay? I've lost so many challenges. I have lost so many challenges due to this. So it is equally important. It is equally important with familiarity of the setup. Then I have to be intimately familiar with the stop loss. People just breeze by it. I have this Al Brooks. I bought this Al Brooks trading course. Okay, he just briefly brushes. I mean, he integrates stop losses in his videos, but in the categories that he's speaking about, the stop losses, he doesn't discuss it in as a specific category. Okay, but now I realized how important it is. Now I realize how important. Now I realize how important it is to make sure that my stop loss. I have to make it. I have to elevate. I have to elevate the stop loss to a point because it merges risk management as well. Because that's what stop loss is. Risk management essentially is the stop loss. I'm risking. I'm risking. I'm managing my risk in order to create an environment where my loss is limited. Okay, that's what risk management is. When the trade is when the trade is not safe, then when I make that trade has to have a smaller risk. If the price has moved to a certain point beyond an ideal situation, that means that the price can actually move down. When that price moves down, that the stop loss has to be way down there. So that means that I have to limit the stop loss. I have to limit my risk. Because if it moves that much get to reach the stop loss, then it'll essentially will cause the account to be breached. So understanding and studying and figuring out how stop loss is integrated and elevating the importance of stop loss in trading is I've essentially, here's what I've done. Okay, for the past 5 years, I've totally focused on making money. Essentially trying to figure out what strategies that I need to work. And then also the mindset. But I never focused my attention on stop loss. I didn't. I heard about risk management. Yeah, I heard about stop loss. Yeah, I heard it's so important. People ask, oh, so what do you think is going to happen if you don't use a stop loss, right? What do you think is going to happen? Stop loss, the category, the description of stop loss is so wide. It's like, don't add to a loser. That's a stop loss. Okay? Don't add to a loser. Don't average down. If you're a fundamental investor and you believe a company is going to be, I mean, it might take a management. Look at Intel. It's been going down for years and years and years and years. And the only way it could have changed was the government involvement as well as new management, which takes years. Okay? You cannot have your money tied into a single capital. You can't. You cannot allow a single account, single security to tie up all your funds for years because you have to start making money, right? And so fundamentally speaking, that makes sense. People say, okay, so so apparently Al Brooks has I think was it Al Brooks? I think it was Al Brooks, and he apparently has a friend who's a lawyer. Was it him or somebody? Okay, so apparently what he did was when the market dropped 50%, oh yeah, it was Al Brooks. He says this. He says that I know a friend who, he says, okay, I can tell you a 100% foolproof way of making money. That's what he said. Okay. Then he pulls up the S&P chart, and it's been going up every not every year, but it's been going up. Okay, it's been going up. And so what he said is this: he has a lawyer friend. If the market drops 50%, he'll buy. Okay, he'll buy. Okay, and then if it drops again, he'll buy again, because he knows on a fundamental level, the way that the S&P is structured is that if there's an underperforming stock, it'll pull it out and put something that's like high flying because it wants the S&P to keep going up. Okay, that's how it's managed. Okay, so that's one full proof of doing that. But you cannot do that as a day trader because you cannot tie your money into the market for years and years and years. Okay, I have to, as a day trader, have to exit trade when the price is moving against me as soon as possible, knowing that it is not just a slight pullback, but it's really a reversal that will undermine my capital or tie up my time and energy and all that stuff. So that I have to exit trade. So what comes out of this psychological study that I did, the convenience of studying the psychology, then the convenience of studying the setups, emerges this volcanic thing that explodes out of those two principles to weigh it, to create a balance. It creates a balance, okay? It creates a balance. All right? It creates a balance. That's why a stool has at least three legs, okay? Three legs creates a balance. But if I just have two legs, the stool is gonna fall over, okay? But but a stool has at least three legs. To be even more stable, I need four, okay? But in trading, I need at least three, right there, three. One of them is the psychological resilience, okay? One is the psychological resilience, and a pristine, practiced, and known ins and outs of those setups. Thirdly, I have to know the ins and outs of this thing called the stop loss, because I know what happens. Somebody asked me, "Hey, do you know what happens if you don't use a stop loss?" I scratched my head for many, many years. Okay, I know what happens. You know what happens? 5 years go by. Every penny's gone. Okay, I live out of my car. Okay, I have no money. I have lint in my pocket. Okay, and I am driving my car with bald tires. That's what happens if you don't use stop loss. Okay. So then I realized the significance of having that third peg on that stool is creating a balance. Maybe there's a fourth one that I'll discover later on. Maybe it's the fourth one that I'll discover. But so far, what I see as I start to develop in my trading is that there's three. Okay, the psychological resilience, the intimacy of the setups, and finally, extraordinary, extraordinary, extraordinary respect for the stop loss. Without it, I know the story. You tell me what's happening, and you say, "Hey, I made $1 billion doing this, but I don't know anything with stop loss." You're gonna lose it. You're gonna lose every penny of it. I know it. You know why? Because I've experienced it. Okay? That's why a stool has at least three legs. Okay? 3 legs. At least three legs. Got it? I hope you got it. Okay? By the way, I'm not talking to anybody else. I'm just talking to myself, okay? I'm going to watch this. I'm going to post this on YouTube, and I'm going to watch it, because there are three things. I'm going to be reiterating it. It's like the psychology is so important. I've experienced this. The second, the setup is also, don't make light of it. It's so important. People say, "Well, I could trade it." Bullshit. You have to know your setup. Okay? You have to know your setup. Okay? You have to know it intimately, because you'll make the wrong trade if your setup is not right. Okay? Thirdly, you have to, stop loss seems like a just minuscule kind of a topic, but it's so important, because any one of those two things that are out of sync will be saved by the stop loss. It is, don't make light of the stop loss thing. It is so important. Okay? It is so important. I'm sitting here after 5 years now. This is the third month of 2026, and every year I said to myself, "This is the year I figure it out." But I never realized how difficult trading is. I never realized. So it's like I'm saying to myself, before I finish college, I'm thinking to myself, as soon as I become a freshman in college, I'm thinking, "Oh, I'm gonna be done in about a year." Okay, that's what I'm saying to myself. Okay, it's so easy. I'm gonna be done in about a year. Okay, then it turns out it takes 4 to 5 years to get all these things taken care of, because even if 4 to 5 years, my grades reflected that I wasn't able to absorb all the materials. It takes time and energy and focus in order to obtain that. The subject matter of the school, the university of the market. The university of the market requires understanding those three principles of trading to a level where I can graduate and say, "Did you study Did you study psychology of trading? That's one. That's the coursework number one. The coursework number two is, did you study setups? That's coursework number two. Did you study coursework number three? Stop loss. Did you study that? It is an integral part of trading. The University of it is essentially it's not a college either. It's a full-blown university. It has to be a full. It's not a junior college either. This is no. This is not. This is not a. This is not. This is not to be taken lightly. This is a. This is. This is the University of Wall Street. This is it. Those three things are subject matters of trading. Okay, the coursework, the syllabus to the graduation of receiving a bachelor degree. Okay, okay. Well, you can't do anything with a bachelor's degree. You gotta have at least a master's degree. Okay, you can't do anything with a bachelor's degree, because bachelor's degree, really, you haven't had enough practice. But in order for me to be really making money from the market, is I have to attain a master's level in the University of the Wall Street. Okay, that's what I have to do, and the syllabus is very, very simple, but it's very, very complex. Okay, there's only three classes that you have to take. Okay, that I had to take, that I spent so much money on. Okay, there are people who can graduate early. There are people who will never graduate. Okay, never graduate. And then there are people like myself who probably will never graduate. Okay, remind you, I was in elementary school third grade twice. Okay, I'm the person who was in the elementary school twice, 3 years. I mean, third grade. I had to repeat third grade. Okay, all right. I had to repeat third grade twice. All right, right. So, whoa. So that means. Okay, do you understand what that means? It means it means the importance of trading. You have to graduate and have a mastery of these three coursework in trading. I wish somebody would have, like, see, it's so complex, and people talk about this, talk about this. It's a plethora of information out there. It's like, you have this setup, you have this, you have this, you have this psychology of this, you have this. But fundamentally speaking, I wish that somebody would have like said this to me. Okay? I wish somebody would have said to me this. Okay, so you are about to embark on a course of study. It is essentially a university. It is essentially a university course. If you copy somebody, okay, and then you make it work, it's called vocational school. Sure, you can make money off of it, but you're really not understanding the full breadth and the depth of what trading is. So you can go into a vocational school and become a mechanic in trading and still make money off of it on a consistent basis. But in order to move into that area, even it's an eventuality, the coursework within the study requires those three studies: the psychology of trading, the setup, and the stop loss. Those are the three courseworks that a person must study. Okay? Once those coursework is studied, then it essentially is it essentially is. So if I were to relate this to a marathon, I would say that most of the marathon is essentially understanding those three things, and then everything else would be downhill towards the finish line. Still, there has to be some work to get to the finish line, but once those three things are understood, the the difficult part about understanding trading is understanding those three things. So you have to graduate with a mastery in the school, in the University of Wall Street. Those three are the coursework. I pray on my Catholic God's, within my Catholic God, that I spoke the truth. Okay? I pray that I spoke the truth. Again, trading on an individual level, okay, to stave off losing the house, losing the Harley Davidson, okay, losing the boat, okay, losing the motorcycle, okay, well, Harley Davidson is a motorcycle, losing 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 the car, losing the Maserati, okay. It is a university. The resilient mind, A plus setups, and impeccable stop loss. Those are the three principles that must be, okay? That must be, mastered in order to be an effective trader in the market, okay?